Good afternoon and welcome to BizTech's ASEAN Midday Market Watch. Our guest today is Gabriel Yap, Executive Chairman of GCP Global. Now, Gabriel, it's always great to have you on the show. You're in Marina Bay now, right?
Yes, Brian, I couldn't change the camera that way because the sun is coming in through here. So otherwise you can't see my face. Yeah.
Yeah, so Gabriel, before I get your insights, let's take a look and see how markets are performing across the region. We'll start with Bursa Malaysia, which is at 1,602.64. It's down 0.35%. The SGX is at 3,193.13. It's down, no, in fact, it's up 0.26%. Now, moving across to other markets in the region, we've got the Nikkei, which is trading at 29,647.95. It's up slightly, 0.02%. Shanghai Composite is at 3,414.74. It's up 0.46%. The Hang Seng is at 28,808.23. It's up 0.05%. ASX 200 is down 0.11% at 7,050.90. And rounding off the numbers, we've got the Kospi, which is at 3,194.46. It's unchanged at the moment. So what's your view on how markets have performed this morning?
Well, Brian, I think markets actually slowly reaching the inflection point. You know, in the last few Fridays, minus the last Friday where we came onto your program because of Good Friday holiday, you notice that we have been guiding your viewers that essentially the big jump in the US 10-year Treasury bill from the beginning of the year to 1.77% as of 2 weeks ago. Yep. You know, if it doesn't rise too quickly, too fast, the markets basically will be the best buying opportunity as what you've seen for the last 2 weeks. But right now, since last week when we mentioned about it again, and today, that rate has fallen down to 1.556. So if the continuance in the downtrend, you know, from 1.77% last week continue on the US 10-year Treasury bill, you know, then that will be setting up a hot bait for tech stocks and interest-sensitive stocks, like, for example, REITs in the US.
Now, so the Dow Jones closed past the 34,000 milestone for the first time overnight. And also we have basically buoyed on retail sales numbers, which were up 9.8%. So essentially the US consumers are out and spending. They're spending their stimulus checks, they're spending. Now, are you then rebalancing your portfolio in any way, given what you've just told us and given this data that's just come out?
Well, Brian, you've noticed during our past programs, we have mentioned that when the Dow slowly crosses above 4,000, it's literally an eye-opener, right? So now the Dow has also hit a new high. We did mention to you that the best time to buy is when there's jittery in the market, which you saw the last 2 weeks. Yeah. You know, so we like to actually be greedy, you know, when there's blood on the streets, literally. Now, I mean, this time around, you know, the markets did pull back, but not as much as other previous crises, like during the pandemic last year, it went down 34%. This time around, this correction only took the Dow and many of the key indices to the region of between 7 to 9%. But nonetheless, I think that's already setting a good hot bait for, at least for us, you know, in terms of opportunistic buying.
Okay. And how about in China? Because China's GDP soared 18.3% in the first 3 months of the year compared to a year ago, slightly below expectations of 19%. But overall, given your portfolio, what's your view on this and how it impacts your investments in China? Particularly the fact that, you know, you've got a lot of tech stocks that you've invested in, and there is a clampdown on the tech sector in China.
Well, there was a clampdown on the tech sector, but you notice that things in the tech sector move very fast. So essentially, after announcing the $2.8 billion fine on Alibaba, I think the beauty about the the regulators in China is very clear. They actually haul in 34 executives from the various big tech companies, from Tencent, Meituan to JD.com. And what is very clear is that the SAMMR has clearly identified the key areas. In this case, it's actually 9 particular areas, chief of which is the two choose one policy, which actually was the bane for the fine by Alibaba. I think essentially the authorities and regulators have told the big tech players that, look, these are the things you need to comply with, subject to the 9 areas. We give you about a month to actually adjust what you need to. We're not here to collect another 2.8 billion. So the earlier fear that we have mentioned in your program, actually has turned out to be the best buying opportunity for big tech sectors. The other indication that came out yesterday, Brian, is that, with the very strong GDP numbers, albeit a little lower than market expectation, you notice that some of the tech companies or tech names, on the North-South Connect, as well as the Hong Kong North-South Connect, actually suffered a little bit yesterday, even though our better names like your Tencent, your JD actually did inch up, and today Meituan actually inch up. That was because the PBOC, that is the central bank in China, yesterday actually, when they recycle or remonitored, the treasury bill buy, it was only confined to 150 billion, even though the refinancing was 156 billion. So in this regard, the market actually took it as a threat that essentially PBOC is not expansionary. But the fact is that PBOC has already taken into account the fact that the stronger growth that's coming through in the GDP numbers, which you saw this morning. So to me, this is actually very shrewd capital management by the central bank, at least much better than what the Federal Reserve is doing in the US.
Now, finally, I want to ask you about the numbers that just came out of Singapore. March non-oil domestic exports expanded 12.1%, and that was from a year ago, driven mainly by non-electronic shipments such as petrochemicals, specialist machinery, and pharmaceuticals. Now, that exceeded analyst numbers quite significantly. What's your view on the Singapore economy moving forward?
I think first and foremost, the NODX, which is actually normally used as an indicator of the exportability of Singapore numbers, I think one must always reach it with too much, with a pinch of salt, But in terms of basically with respect to the GDP powering numbers, I think what you're seeing is that with the economy the beginning of this month, with 75% of the people going back to the workforce, the retail sector is being given a leg up. It has not powered back to the pre-crisis level, but it's getting there. The office levels that people are talking about, again, is not back to the pre-COVID level, but it's almost 80-90% level. The industrial, the data center, they are actually there, and actually they are seeing even greater demand after the pandemic. So the sense going forward is that, with property prices in Singapore setting new record highs, and with, even criminals in Singapore are actually getting away with bigger amount of money being swindled. Of course, thanks to
and that's an
wonderful
scandal
authority
coming up in Singapore.
Yes,
right?
yes. They are finally caught, and thank goodness, that's why the fact that a lot of Chinese billionaires are coming to set up offices, family offices, buying penthouses in the region of $50 million and more, actually is indicative that the authorities in Singapore are getting a very firm grip on both the economy, the corruption level, or practically the existence of no corruption, and that's a great thing, as well as the ability to steer the economy in the right way when COVID actually powers it, or post-COVID actually allows it to power ahead and recover back to the pre-COVID levels.
Now, Gabriel, thank you very much for your insights, and thanks for coming on the show.
Thanks, Brian. Have a good weekend.
Yep, we've been speaking to Gabriel Yap, Executive Chairman of GCP Global, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www